Here's when we started looking with the S&D in here that got mitigated and ran. The next S&D from this low to this high, and then the guy right here that got mitigated and ran, and then the inside 4-hour plays that came in from these inside ranges that once again got mitigated and ran. Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going, guys? Welcome back to mentfx, and I got a quite entertaining video for you guys today, just talking about the fruition of what UJ has done and what EU is doing and what basically everything that's going on a little bit before it happens, but also as it happens. If you've been a follower of my channel for a while, then you guys know that I've been extremely bullish on UJ forever now. Honestly, I don't even know how long it's been, but it's been a very, very long time. And something that I spoke about that was really important in the previous video was the fact that if you recognize which 3-box system you're in at any given time, whatever narrative that might be, whatever structural impulse that is, or even if it's one on a different time frame like this one right here, what you're always going to do is once you can establish that and understand what the next liquidity that needs to be ran as part of that structural narrative is going to be, what oftentimes happens is you're going to allow that to line up with any given higher time frame bias that you might be after. So as a lot of you might know, I'm not going to do too much talking on it right now. We've been extremely bullish, as you all know, on UJ ever since these areas here, and within the mentorship, we've been speaking about it going long ever since that, and we've shown you and looked at a number of community outlooks where a lot of retail-based traders or just traders in general are still short on this and have been short on it forever. And if you remember a few of the videos that I recorded and made available for you guys here on the public channel, we actually zoomed out and spoke a lot about this monthly time frame and how it's also tending to shift to the bullish side. And as it's done that, we spoke about how this weekly structural narrative was allowing this delivery of now, 3 years of price action or whatever it was, 5 years, to come and actually now be liquidated as part of the run on this liquidity. And that's one of the biggest reasons we've had these enormous jumps in UJ over this time and this very bullishness on UJ. At the same time, we've spoken about the inside 3-box systems that we've been entering and have looked to enter on the way up, such as these ones right here is when we started looking with the S&D in here that got mitigated and ran. The next S&D from this low to this high, and then the guy right here that got mitigated and ran, and then the inside 4-hour plays that came in from these inside ranges that once again got mitigated and ran. And all of these 3-box systems, as taught on this channel, ended up setting up for a beautiful upside potential. And what you notice is every single one of these next highs as part of the actual bias ended up occurring with the liquidity in mind, right? So a lot of dumb smart money is still stuck on looking at all these equal lows, waiting for price to come and take them out, wondering why price doesn't take out liquidity, when, as you all know from the previous video, price doesn't move just towards liquidity just because there's equal highs or equal lows. Price moves towards its most recent range, the most recent established ranges, and in the direction that smart money is continuously getting involved in. And as smart money protects their positions on the long side in this case, or whatever side they're in, but in this case on the long side, the highs are the things that are going to be liquidated. And as a result, you see these highs liquidated, and those highs, as part of their given structural narrative, end up lining up with other highs that then actually becomes liquidity. And as you know, I made a few videos when price was in or around these areas. We spoke about going long from these areas here. Price comes, absorbs the location, and then continues going long and continues delivering. And once again, as you all know, over the last few weeks and or months even, as I release videos for you guys, I spoke about this high right here and how price was most likely than not going to make a run for the high here and come to liquidate it, because that was part of the bullish nature. The bullish price was delivering. There was no reason for it to stop delivering, and this was a high that probably price wanted to aim for. And lo and behold, today is the day we came and liquidated that. I'd even put something in here 22 years later, discussing webinar. The 3-month high has been taken out. Nice little 22-year liquidation. So this has been brewing for a long time. Whoever was positioned or is positioned on this from back here, as well as whatever retail is looking to get positioned very long term, people that started getting positioned here on these breakdowns here, and putting their stop here, that's ultimately what's occurring. And then this major run, or the beginning of this run on liquidity that happened first from the weekly. If you remember this weekly zone here that we looked at, or actually this weekly zone here, when it broke, this was the weekly we were looking at, price mitigated. Then we looked at all this price action in here on the daily. So if you don't know what I'm talking about now, make sure you go back and check out my other videos where I spoke about all this movement in here and how we followed this bullishness up and how this was all done beforehand, right? Again, anyone that's been in the mentorship and is in the mentorship knows that we've been following this all along, and it's almost boring at this point how easy this has been in terms of bullish delivery and continuations. And similarly, this week, what you saw, right, is a development, once again, of these same 3-box systems, right? So you can see I was looking at this guy right here to continue going long. And at the same time, we have these inside structures right here that we were using to once again go long. Because remember, when a market is long, we want to look for the long side. We don't want to force shorts. And what do you think a lot of retail was doing? You know, I don't even want to go over this again, but retail for the last months on end has been short and is continuing to look short, despite the fact that this is running beautifully. But notice what's occurring here in reference to the previous video, right? These 3-box system setups, so in this case, that's going to be, as we follow this move up with its break of structure to the top side, right? The most recent break of structure for this week specifically was from this low right here to this high. And similarly, now we have the 3-box system taking effect. We have the impulse, we have the S&D that created that impulse that is now sponsored and created by that inefficiency. So we know where the main sells before the buys came in on behalf of the institutions or the composite operator, right? So we know where we're going to most likely assume and see the weak to strong hand transfer or the weak to strong hand transfer. And notice how the next structural point or the next high is going to act as that next point of liquidity, because once again, as this price begins to go short, a lot of people are trying to enter short, and when they enter short, even though some are scalping inside of here and entering shorts with highs here, right, all over the place here, most shorts, if they're placed, especially those that are emotional and price starts to go against them, are going to always move their stop either to here or above there, right? Because that's usually, that's how people think. People tend to think in ways that's like, there's no way it keeps going. It's topped out. It's got to top out. So they start getting involved. And as they get involved, they might increase their stop. And as they increase their stop, they increase it to the points that make sense from a standpoint of the data on the chart, aka this high at about 135.235. And some are a little bit more higher, just looking for a potential, maybe there's a fake out, whatever it might be. Either way, the idea is that is how a lot of dumb money or emotionally distressed traders are looking to get themselves positioned. And as a result, when price does come back into that zone and create that third box system or the 3-box system finale where the lower time frame sets up with the weak to strong hand transfer, we then have the run on that liquidity and once again expect it to continue running to the top side to continue liquidating. Again, not financial advice, just a proof of concept over the last few months and its beautiful delivery. But now what's very interesting about this specific market is that if we notice this high right here and we recognize that as the liquidity of the next run because we're aware that we've been in a bullish market, we are in a bullish market, so we're going to expect the bullishness of the market. And again, you guys know this is true because we've made videos ever since we've been in these areas, and in these areas, and every single one of these points, the videos that I had made and put out to you guys publicly, even as well as privately, of course, a lot more privately because I spend most of my time and most of my hours of my day on the private mentorship with the people in there, the content in there, and the development of our traders there. But that said, the videos I've put out were made during these points, and these points. And as you all know, ever since then, we've had beautiful runs up and the liquidations of each one of the given highs. And once again, even though, yes, you have people selling here and here and here and here and all over the place and having different forms of RR and risk. And, even I was looking for a sell at some point in these markets too. What you have on the retail side is always people that are going to be greedy, right? This has always happened, and you've probably been in this boat before as well because almost every trader in the world has been in this boat, but a lot of people stay in this boat because they don't seek further education and don't seek to refine their actual system. So what happens is, as they position themselves or get emotional, they keep looking for bigger downside potential. They continue shorting. That's why you're going to see about 80% or more of retail mostly short on this. You ask almost anybody about UJ, they're like, oh, it's short, gotta go short. It can't be going long anymore. And this has been the case ever since we've been down here and then all the way up since then, right? So what you're gonna have is those emotionally distressed people start to put their stops above highs, above these highs, start increasing their highs, maybe higher, maybe higher, maybe higher. The same thing that you're gonna see happening here. And lo and behold, you're going to have the liquidations of those, just like we've spoken about, just like we anticipated, and just like it's delivering now. Now, similarly, when we look at the inside price action here and notice the same 3-box systems, which are creating inside outer structures as well as inside structures that are all valid according to the way we trade, we are once again going to be looking for the topside liquidation. And notice what's interesting about this topside liquidation. I didn't have to go and spot any equal highs, equal lows, or anything like that to try and determine where a target is. Because remember, the target is already determined by the way that you figure out where your 3-box system is, right? Just like I taught you guys in my other videos, including the 3-box system, and these are all free, so you do not have to join me to learn this stuff, right? You guys have to recognize that. However, of course, in the private mentorship, we're going to have a lot more depth, and when we do our outlooks, you're going to see month after month after month for now over about a year and a half, 2 years of how we map out these moves and how we're correct all the way through, right? We've been bullish on UJ, I don't even know how long now, ever since back here. And the same thing goes for EU, but on the short side, right? We've been extremely short on this ever since, from what I remember, ever since this original mitigation here, we've been short, and we're still short. And what do you think we're looking for now? The continuation short. And as a result of that, right, as I move up here, you can see the overall bias is short, so we're looking for short, so we're going to continue looking short. We have higher time frames giving us short, so we can follow that short. And once again, the journey continues, right? We go to the trade talk, and I mean, basically this sums it up. It's a different day. It's the same story over and over and over again. We got someone getting in on GU sells. I'm fully for it, right? We've had the beautiful GU delivery as we've spoken about. If you remember, we made a video publicly on YouTube about this breakup, and I spoke about to you directly that we were going to wait for a new breakdown to begin to follow it short. Lo and behold, we got the breakdown on the short side on the lower time frame. Again, you can go and check out my public video that's free. You do not have to join my private to see this. That comes back up and fully delivers down into it. Right, again, the point of all these videos is proof of concept and to basically get you to start thinking as a trader that actually wants to do something in this market, right? It's up to you whether or not you're going to refine a system and test the system, right? This fully comes down to you, and no one's going to have a say over what you do with your own journey. Now, that said, right, as I was speaking about, we have this beautiful range established, and as we have that range established, notice this high. All I had to do was find the next range high as part of my target, as part of my next liquidation, without having to focus on all the lows here as liquidity, all the lows back here as liquidity, all the lows back here as liquidity, right? Because once again, you have a huge number of dumb smart money already in this industry. To be honest, the number of now retail or dumb money within the smart money space has probably outgrown the actual smart money space itself, right? So a lot of people have always been like, oh my God, what do I do? Smart money is becoming the new big thing. Well, realize that same retail approach, that same dumb chart porn related retail approach that really isn't based in education or knowledge and is more so based in now this idea that, oh my God, you can get the craziest RR, you can quickly get your Ferrari, whatever it might be, is now already being adopted by the masses, right? So what you're having dumb smart money that are looking at equal lows and equal highs the same way they looked at them before, but flipped, kind of like I spoke about in the last video, where all they're doing is forcing themselves into trades that aren't delivering because all they're looking for is the now new liquidation of lows, the new liquidation of lows, the new liquidation of lows because there's so many equal lows. And they're not thinking about the actual ranges we're in, the ranges we're creating, and what those ranges are showing us. So once again, when you adopt that form of thinking, the correct way, where you're looking at the range and you're just pinpointing that next high as the next structural run and then allowing the lower time frame to either weak to strong hand transfer and confirm you in, or watching the lower time frame for new, so let's do this, or you're watching the lower time frame for new 3-box system transfers, right? And once again, looking for the same thing with a confirmation here to continue to run the original high, right? Mitigate risk as you need to, so move to break even, and then allow that to deliver to the actual highs. But what's funny about this high right here? That simple act of deciding that this is the high you're looking for as the next liquidity point, notice where that lines up with now on our 3-month chart. Right, exactly the stuff that we spoke about a few weeks ago. When price was around here, I told you guys we are probably going to look for a run just above this high as the next liquidity point because there's nothing stopping this market from delivering bullish. It's been delivering bullish forever. This weekly range created over the course of, I believe it was 2 years or 3 years, whatever it might have been, has come to fruition and is now delivering, taking out highs and liquidating them, and then not only liquidating them, but going above and beyond that because, again, even though every high you can think of as the most distressed traders or the most emotionally wrong traders putting their stops just above it, there's also people that keep extending. And this is that liquidation of that. And that liquidation is being followed across multiple timeframes with beautiful 3-box system setups, right? Now, again, if you want a simpler, refined way to begin to think about this 3-box system, to go from the bottom up and think in terms of multi-time frame structure, as well as multiple confirmations about how to figure out which S&D zones to use, how to use them, and then see that progression over a year and a half. Well, that's all accessible through the mentorship. And the second you join up, you get access to this entire community of insane traders, of people that get funded, month after month. And you have an entire course content section with over 100 plus hours of fully privatized content. But again, you can't just, it's not going to make you profitable like this, right? People lose money in the markets. Most people lose money in the markets, right? This is the major disclaimer. If you want to learn to make money in the markets, you need to do that for yourself. You need to focus on it independently, and you need to really dedicate a good amount of time to doing it. So that's really it. But again, this 3-hour structure lines up beautifully with, guess what? This high here. But notice what I had to do. I didn't have to be looking for these equal highs to be ran. I didn't have to be even looking for this high now to be ran. All I had to do was understand where I am in a market, where I am in a markup, figure out where I am in terms of structure, and as I pinpoint certain structural highs or lows that are going to be targeted as a result of the basic 3-box system with whatever given high is next, that is going to line up with the most important liquidity you need to look for. And as a result, we have that delivery. Now, again, I can look at EU even today, right? This week I was bearish from here. I made a video for you guys yesterday, talking about this right here where I took a -2. Then I took a BE. I don't know if I made a video on this, but I took a break even that night. And then today I took another -1 followed by my +5. I was looking to take this sell and hold it down way into the lows here. That did not happen. Instead, we got that bigger break up into our higher time frame 3-box system, as spoken about in the mentorship, right? Beautiful 3-box system delivered here. And once again, we're looking for the same thing, for the delivery lower. There's no reason for me to switch that. Again, it's okay to be correct about the bias and wrong about the trade. I've done that a lot of times, right? Granted, this -2 should have not occurred really, because I was in a buyer's market, but I was buying here in a very hardcore selling market, and I've been very short on this, but the setup was pretty good, so I was willing to take it, and I was happy to take the risk on it, and I was happy to take the loss too, because losing is part of the game, and if you don't allow yourself to lose, you will never, ever win. So that said, yeah, we've been very bearish on EU, and that's continuing to deliver, and we're still looking for that bearishness. I don't know how this is going to deliver now, but, the bearishness is still in motion, and that's what we want to look for. And as a result, throughout this week, we're just looking for the liquidation of the next low as per this. And notice how we easily pinpoint that liquidity, right? You have the high to the low, box 1, box 2, box 3. We've already looked to take the shorts off there. We've had some people in the mentorship take this short inside of here and are now just holding this down. Some people are still getting involved here, right? I'm looking to get involved there myself. Again, not financial advice. Everything I do should be considered a demo environment, fully simulated. And any money that you make or lose in the market, or aim to lose or make in the market, is off your own accord completely. It's on you, right? But notice how I don't need multiple lows to address this low as the liquidity, right? I don't need to find all those equal highs and equal lows. And guess what? Anybody that's in that format of thinking, or that dumb smart money, or that ever growing smart money concept space that is now, again, based in the same emotionally distressed principles that were taught before, there are still people that were originally buying here to take out this liquidity, buying here to take out these equal liquidity highs, buying to take out all this equal liquidity, buying to take out all this equal liquidity, still buying to take out these equal liquidities, right? This beginning of the week, they saw all these highs. They're like, well, we have to take out this liquidity. And guess what? It continues pumping short, right? And you're getting the same thing back to back to back over and over and over again. You're getting these range deliveries of 3-box systems, and the liquidity, whether it's multiple or just one line, right? That's where it's heading for. And guess what? When we zoom out, we're probably, look at this, right? When we zoom out, guess what this low of that range actually lines up with? Well, now it lines up with this beautiful equal low that now acts as a real liquidity target. And now you're going to have a multi-year liquidation, at least under my opinion, of these lows, right? And anyone that's been positioned here that rode this up and didn't take profit, or continued riding it up and didn't take profit, or continued to enter new longs and didn't take profit, and is now continuing to enter even more longs, because clearly it's a long market, and placing their stops just below here or way under here, are more likely than not going to get liquidated as part of this overall bearish move. And that's probably going to continue liquidating those people, just like we've spoken about and have been correct about the entire way through this long side, where we spoke about the ranges in here notice how, again, a range high lines up with liquidity, right? We didn't need to spot all those equal highs to know that that's liquidity that's going to be ran. All we needed to do was follow the exact principles of the 3-box system and figure out where that high is, and we look for the liquidation of that, and that will line up with the other liquidity. Similarly, that high gets made. Guess what that lines up with? We go left, look at that, beautiful equal highs, and that's what gets liquidated as part of this structure, as part of this structure, as part of this structure, and it lines up with that liquidity. And you don't have to go and look for equal highs and equal lows. You're making your journey harder by trying to force trades into equal highs and equal lows as liquidations. Do not give in to that kind of dog shit education, because it's going to affect your bottom line in very negative ways. Focus on this 3-box methodology and focus on how it delivers over and over again, and how this same 3-box methodology also applies in regards to liquidity runs. And notice how that 3-hour range that we spoke about, once again, lines up perfectly all of a sudden with this other high, making it equal highs, making it liquidity, making it most likely than not the run on that liquidity next. Just like we've been bearish on EU and looking for that run continuation, just like we've been bearish on GU, and that has delivered absolutely beautiful ever since this move down. And guess what? That low was the low that we were looking to liquidate it last week, and notice what that lines up with. And notice what's being liquidated now. That is being liquidated, and notice what that actually acts as: equal lows. So again, if you take anything out of this video today, recognize equal lows and equal highs do not matter unless they are for some reason part of an already prescribed 3-box system range. When that 3-box system range exists, and as you're following that 3-box system range as per a higher time frame narrative or whatever it might be, those lows are going to line up sometimes with other lows, and those are going to be the potent equal low and equal highs that want to be taken out, because they've now set up a reason to take them out, versus the idea of, hey, we've continued to create equal highs, 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 equal highs on the top side. We have to long, 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 we have to long. Oh my God, it's spring. Oh my God, it's a spring. Oh my God, it's a spring. It's a spring. It's a spring. It's a spring. And constantly trying to get into that long. And that is how dumb smart money is continuing to get liquidated, even when they think they're teaching the concepts of Wyckoff or whatever it might be. Don't give in to that. Go and study the markets and learn to see them under this 3-box expression, and then see how that 3-box methodology lines up with other highs and lows in the market, and how just the anticipation of the next low liquidity as part of a structural range lines up in the future with an actual equal low that will act as liquidity to take it out. How a low will then act as its own liquidity to be taken out. How the next low will act as prior equal lows to then be taken out. And learn to follow that down, and don't give in to the fact that we've had too much of a bearish market, or we've had too much of a bullish market. Because as I've said for the last 3 months, I hope you're sick of hearing it from me, I've been bullish on UJ. I have been bullish on UJ. And I'm still going to look for bullishness on UJ. And as a result, every time we've done that, we've seen that delivery occur, and we've seen the liquidations of anyone that's starting to force any sells here, of anyone that's been positioned in sells here, anyone that's been positioned in sells years ago, right? Because again, this is happening across the board, from pension funds, huge or smaller hedge funds, medium-sized hedge funds. There's always a form. And again, not everyone's just getting liquidated, right? Some hedge funds do this as part of a normal hedge, and this is fine for them to get liquidated because it's part of their risk to reward, but it's still occurring for that reason. And notice how price sets up as a result, right? In order to allow that to occur. So going forward, just recognize what I've been saying over the last few months on my channel, how I've taught you to begin to think, the emotional mistakes that everyone continues to make, and notice how the mass retail side in the smart money space has already outgrown the smart money space itself. Go to look up anything smart money and watch the video. A lot of the time you're going to see a segue away from the idea of structure, S&D confirm, and you're going to segue into the idea of find the liquidity. Now expect price to take out that and take out this and take out this as the Asian consolidation and take out that and the next thing, right? And you're going to be back in square one of trying to focus on this retail-minded, emotionally distressed form of trading where you have no clear bias. The other option is you can decide to look from a top-down approach the way I teach you to do here. Figure out where you are within multi 3-box systems, right? Figure out where you are over and over again by looking at a higher time frame and saying, hey, I'm bullish, and then allowing the lower time frame 3 boxes to deliver into that, recognizing that sometimes they never get a pullback and other times they get the perfect pullback into the demand zone, undergo their weak to strong hand transfer, give the opportunity for smart money that's willing to wait and be patient for the entries to get involved and take it up to the next point of liquidity. Do it again and take it up to its next point of liquidity. Do it again and take it up through the next point of liquidity, and in some cases continue running as part of a higher time frame bearing that runs and runs and runs, and now is liquidating a 22-year high that was formed literally 22 years ago and is now delivering and actually being taken out as part of the newly established bullish trend in this market. And that is how you formulate an overall system, an overall bias, and you begin to find consistency in what you do. Not by following chart porn that doesn't get you anywhere, that teaches you to look for the same exact shit that you used to look for, just flipped, right? Notice how those highs of that bullish range in there on that daily, right? Remember that we spoke about, now lines up with all these highs, and now these equal highs will now act as that liquidity to now push the market through and continue liquidating in this case, right? Don't give in to this idea that, hey, we also have equal lows here. Because we took out these equal highs, we have to take out these equal lows. That's not how the market functions. That's not how the market works. We follow a simple basis of structure, S&D, and confirm. That's what my entire course, that's my entire 100 hours of private content here is entirely focused on. It's focused on SSC, structure, S&D, confirm, and it has been focused on that for over 2 years now and has never segued or changed. And it's the exact same thing that has allowed others that have taken the time to utilize it. Now, again, this is no guarantee that it'll be the same for you, to actually find consistency and grow accounts and grow their own funded accounts, right? And again, everything I say should be thought of as demo perspective or whatever in a simulated environment, and you should test everything yourself, right? But the thing is, when you start introducing these weird concepts of, again, like I said, look up any other smart money channel. Now there's some out there that are phenomenal. I'm not going to name names because I'm not in that game, but look up any and notice what they're trying to tell you. Are they teaching you under a format of how you can start executing something on your own, or are they teaching you something in the form of, hey, look for equal highs, look for equal lows, expect just every liquidation possible, just back and forth, and look for that to continue, right? With no staple as to why you're looking for a given thing, where you're looking for that thing to occur. Your eyes, when you focus on just equal highs and equal lows, won't really take you anywhere, because equal highs and equal lows are everywhere in the market. And it doesn't help you just to look for that, because again, you're going to find yourself in the exact same place that you found yourself before when you used to study double tops, double bottoms, triple tops, triple bottoms. You're just going to be forcing the opposite side. And if before you had negative win rates or negative RRs doing that, what makes you think just flipping it the exact opposite way and then having it happen just on the other 50% side is going to be any better? It's not. You need to learn to spot this over and over again. Notice how this operates and sets up in the market on repeat, and then get used to seeing it, so that then when you're in a market that's forward tested or live, you can actually foresee that actual movement. So when you're looking any week in or week out or any day in, day out, and you're seeing a range develop, like these lower time frame ones, you're not looking for shorts. You're still long. You're still long. And there's no question about that, right? I made a little I said something in the mentorship here. I was like, I love it. Some dude on one of my other public videos said it. We get it. You predict the move. Stop making videos on UJ. Someone was sick of me making videos on UJ talking about how bullish it's been. But again, that person is missing the point completely. He probably won't find profitability, right? Because the thing is, the point of the videos and the videos I make is that you come back every single time and go, why is this man talking about the same shit? Can he switch it up? Where's my other gold? Well, guess what? The gold is the fact that it's the same shit on repeat. The markets deliver the same way over and over and over again. And the same way I was bullish on UJ 6 months ago, the same way I was bullish on UJ a few months ago, as per my public videos, the same way I've been bullish on UJ a week ago, and even, maybe a few days ago, if you saw a video on UJ a few days ago, is the same thing I'm doing now. And it hasn't changed. And now we're liquidating like every high, and guess what? The market's overextended now. And how long has it been overextended? Well, I guess the market's been overextended on the RSI for over a year now, or 2 years. So, which kind of methodology of thought or which theory do you want to go and execute upon? Which one do you want to follow? It's really up to you. Notice the point of my videos isn't to show you something brand new every single time. It's not the point of it. The point is to show you the same shit that occurs day in, day out, a proof of concept that you can go. I had to jump in here. The file got corrupted, so I was able to save it, but it didn't get the end of it. To close out this video, to make it simple for you, everything I show you is for proof of concept. So you can take this, learn it, study it, and do it for yourself. It's about building independence. You shouldn't have to be reliant on anybody in this market at any point to be making money in it. If you are, you will not find success in it ever. If you want to be reliant on someone else, you should consider going to a financial advisor, or consider, holding up to an indice or a solo 401k and just letting that grow you over time as you do other things. If you want to become an independent, consistent trader on your own, you need to recognize that all of that happens from basically inside, from only what you put in. And as you execute and learn, you begin to actually give yourself the ability to do it for free. Don't buy into the shit online with the complete marketing, with basically the non-stop chart porn posted everywhere. Everything's the same thing, and people that have done it in the markets have done it for hundreds of years, ever since the 1800s, ever since markets have been tradable. This has remained true and stood true. It has evolved in terms of its understanding over time, and the way that I've decided to teach it and show it to basically my community, to the world, to my private, especially with the depth that I provide, takes a lot of that understanding and simplifies it in ways that can further you and can begin to let you think in this fractalized way and begin to think about multiple time frame liquidity and whatever it might be. But again, it always boils down to the same thing, to SSC. Write this somewhere, staple it onto your head, get a tattoo of it, whatever it might be. These are the only 3 steps you need, and if you master these and you learn to see it over and over again across thousands upon thousands of hours over hundreds of markets and hundreds of setups, you're going to put yourself ahead of about 90% of the people doing this, whether they're in the retail space or the SMC space. Because like I said, a lot of SMC, almost 90% of it now, maybe even more, has become very mass retail at this point, right? Which makes these people the exact same as these people here. So focus on this. Focus on moving forward. Don't buy into the dog shit marketing. Notice how the 3-box system simply sets up for you an entire narrative and actually provides areas that you can then begin to target, and also gives you areas that you can work from. And then that lower to higher time frame approach allows you to basically conduct a conclusive and create an overall story about what price is doing. So thank you very much for watching, guys. I hope you enjoyed it, and I'll see you all in the next video. Also, if you want to get funded and you are absolutely killing it personally, check out mentfunding.com above. Absolutely amazing. We continue to put out amazing updates. The model is clearly well received, and you have a whole number of new funding firms popping up with the exact same model. So we're going to be releasing some exclusive kind of upgrades just on behalf of Mentfunding, and maybe even improving some of the metrics that other firms probably will not be able to follow suit in. So again, thank you very much. I hope you guys enjoyed this. If you want to talk with me and get to know me better, or speak in the community and just become a part of one of the best communities in the world, very active, very supportive, check out the link below. And now that we're done with the plugs, I hope you enjoyed this video, and I will see you all in the next one.